Brooke, what do you see ahead for the Canadian dollar? Now trading at about 77.25 cents US, one of the stronger G7 currencies, although it is facing tough sledding, of course, against a US dollar that is, by some measures, more richly valued than it's ever been before.
Yeah, I mean, most people in Canada don't realize how well the Canadian dollar has actually done relative to the US dollar, relative to the other currencies. It's been one of the best performing currencies, just not better than the US dollar. And what we've seen is we saw the Canadian dollar actually peak in June of 2021, and it's actually been going up and down since then relative to the US dollar. But even in 2022, we've seen the Canadian dollar move lower as oil prices have been moving higher. Now, there are several big drivers for the Canadian dollar. One of them is the oil price, also the two-year differential between the bonds as well. But oil price has a major impact. But when the price of oil was going up, the Canadian dollar continued to move lower. And what I'd like to say is there is a risk. Now, if the whole market moves on around the world to risk on and the US dollar goes down relative to all other currencies, the Canadian dollar will probably do okay. But if not, and oil pulls back down here, we could see the Canadian dollar underperform the US dollar without the help of the price of oil. And that particularly, if we see some volatility in the markets in August and September and into October, when the US dollar tends to be strong as well. So yes, the Canadian dollar has gone down relative to the US dollar, but if oil heads lower, we could see the Canadian dollar head even lower as well.
That graph, which was suggested to us by Brooke, shows the blue line is crude oil measured by the left axis, US dollars per barrel, running up that left axis. The white line is the Canadian dollar in US dollars. The right axis shows us the number of US cents that the Canadian dollar is priced in. You can see that relationship. As Brooke says, the Canadian dollar actually declined as the US dollar was rising. And you can see the decline that we've seen recently in the far right edge of that blue line. Also, the Canadian dollar coming under pressure during that period of time. What do you see for the year ahead in the Canada-US exchange rate, Brooke?
Well, I think what's going to be the big factor here is, we have seen the U.S. dollar outperform relative to world currencies really since June of last year, 2021. And it's been really strong because of the Federal Reserve hiking rates. Now, the ECB is set to start hiking rates for the first time in 11 years. That might provide a little bit of softness for the U.S. dollar, but I still think that Powell's going to come back and still hike rates here at a pretty strong level here overall. So I still see the U.S. dollar doing well. We may have some ups and downs over the next few weeks around the ECB. But I still see that happening, and I see the U.S. dollar still moving higher. And if we have risk off in the market, that just attracts investors back to the U.S. dollar. And that's a possibility with everything that's been going on in the markets right now. So I expect the U.S. dollar to actually do quite well in August and September, and the Canadian dollar to lag. And then once we get into the fall, even more so.
Let's finish with what it means to investors, particularly investors who invest in ETFs, because in many cases, ETFs are offered to Canadian investors in a hedged or unhedged version that either hedges out or does not hedge out the exposure to the Canada-US exchange rate.
Yeah, so you have a choice when you buy an ETF. If you're buying an ETF that's not hedged, you're actually making two investments. One is in the sector or oil or whatever the commodity is, and the currency as well, because you're taking that currency risk. So you've got two components to that investment. And if you're buying a hedge product, it takes the currency rate of risk out. It says, look, we're gonna manage that risk for you, and it's only with the sector or the commodity itself. So right now, if you believe that the Canadian dollar is going to go down relative to the U.S. dollar, you would tend to favor not hedged products if that was the case. If you said, well, the U.S. dollar is going to be stronger, you would actually do that. Now, you have to look at everything in your portfolio all together as well. You just can't all of a sudden buy a whole bunch of unhedged products as far as the risk goes. But you would lean towards having unhedged products in the U.S. Representing U.S. markets or sectors of the market that do not hedge the dollar itself if you believe the U.S. dollar is going to be stronger.